Did he tee up a hike in December, and did he tee up a pause after that?
He teed up a hike for sure. I think he said business as usual. I don't think he's pausing. Look, the economy globally has been slowing. This is really not new news. In the U.S., it's 3 this year. It's probably 2.5 next year. There's still good numbers relative to trend growth, but that's decelerating the earnings growth, and that's a lot of people worried.
What's it going to take to move him off of this gradual trend, then?
I think a lot worse than we're seeing. He's still in the process of normalizing because he recognizes that inflation's no longer zero. It's creeping higher. He mentioned it. We hear it the same way. CEOs complain about higher wages, can't find workers, transportation costs, raw material. It's not serious, but it's moving in a direction that's going to keep him going.
John, the other, I guess, point of suspense for the markets here besides the Fed really has been U.S.-China trade back and forth. We have this report here that Chinese have come back with something on paper in the form of some kind of proposal, perhaps in advance of the G20 meeting. But the big concern, I think, maybe more immediately for the markets, is the state of the Chinese economy and efforts to stimulate it, to maintain growth there. So where does that all stand from your perspective?
Well, rumors of the death of the Chinese economy are exaggerated, like they always are. But you know, it is slower and tougher there. From my contacts, the Chinese leaders in both business and government are hunkering down in their bunkers for a long war of siege over trade and many other issues with the U.S. There are big changes happening in the South with manufacturing moving out. There's attempted stimulus. But I agree with Bob. I think, you know, the world is growing. U.S. is growing pretty darn well. The real issue here for us and for the Chinese is the rising interest rates. I was with 500 endowment managers yesterday in Boston, and rising interest rates long term is their biggest single worry.
And I guess on the trade question here, which we did get these, reports of this proposal, you say that in China, there's a hunkering down for some kind of a long kind of standoff here. But on a more immediate basis, do you think that there's an appetite to have something in the form of a deal that both sides can at least declare progress on?
I think both sides would like to show that there's a deal, because remember, the covering of these meetings is really done for domestic consumption in both places. Xi would be well off to show some progress inside China. There are a lot of people worried about U.S. relations there, and wouldn't hurt Trump either, following the midterms and et cetera, to show some kind of progress. I haven't seen anything black and white yet, frankly, and I haven't heard any details, but it would be very nice at the G20 meetings in Buenos Aires.
We're all Brexit experts again today, Bob.
Yes, we are.
How much does that matter?
Yeah, it's a negative, no question about it. This has been noise for quite some time, disruptive. They don't know what the answer is, problems internally, rumors they may have to vote again. None of that's good because it just creates uncertainty. Right. But I think the bigger deal is China. Look, these guys, both presidents need something, and they'll agree on something. It might just be the sky is blue, we agree. But they'll find something to agree on for consumption purposes, but the hard work is still
red,
it's going to take a long time.
Maybe I disagree about what shade of blue.
That's right.
Carl, on Brexit, we had some moves last night with the cabinet there. I've thought for some time that this thing is going to end up with another vote and Brexit is going to lose. I have a stake in the UK. We're actually interested in acquiring assets in the UK, and I think that that's where this is going to end up.
On some of these 13 filings that we're getting, Buffett, JP Morgan, right? I mean, heavily into financials now. How can that happen when sentiment is supposedly so lousy?
Well, you know how Warren is. He likes to go where people aren't going, so we shouldn't be surprised, probably. They still have problems. That is the banking sector. Loan growth is happening outside the banking system. The yield curve's not steep enough for net interest margins to be a big number. Now, the stocks are cheap, and we will get some nice rallies. But a sustained up move, I'm not sure.
Has that been your play lately? Financials?
Yeah. No, we're not playing the game. We're looking for a trade. I don't think we're quite there yet.
We keep talking about, so Brexit, it matters because the markets are kind of in a vulnerable state perhaps right now. Fed, China. Are we at a point now where it's all surfacing, we're all realizing that these challenges that the market's been trying to grapple with for a while? Where are we in that reckoning process, do you think?
We have a list of issues that are not fun to deal with, and that's why PEs are under pressure. I mean, think about it. Stock market's up 5% year to date. Earnings are up 25, that means P's are down 20, and that's classically modestly rising inflation and interest rates, comma, and a long list of other things, and you just enumerate them, but they're really...
But are they priced in, I guess, is the big question.
I think they're getting priced in. Look, technically, a lot of us were not happy with the bottom, 2603 on the S&P. There was not enough vigorous selling, so we didn't like the rally. It didn't show a lot of strength either, so we're going back and testing. I hope we find a bottom.
John, is the difference between any retest of those lows in October and now, is the difference credit? Is it different in credit this time, 4 or 6 weeks later?
In terms of the credit numbers, you mean, or
spreads, high yield, prices taking out some of those lows?
Absolutely, absolutely. And I think, I've seen actually managers inside companies for the first time worrying about how to raise their prices to offset costs. And that's what the Fed is seeing as well in their company reports. And so it takes managers a long time to figure out how to retain workers, raise wages, and increase prices. But they're working on it right now. And that's going to give you this upward trend and push for interest rates for some time. And remember, it's not the CPI that drives the interest rates; it's the real asset prices, and they're still rising.
Bob, if this is just a retest for the markets right here, obviously a lot of it hinges on, the duration of this cycle and what it's going to look like from here. Where do you come in on that?
I think we got a ways to go. As we talked about earlier, the economy is decelerating, but still to a good number. The problem is the upside is much harder to see because of these problems. I don't see big downside, but unlike the January correction where we bounced, it took 7 months to make a new high, if you recall. I think it's going to take a lot longer this time.